Hi, good evening, everyone. Myself Krishna here from All India Agarbathi Association. We're pleased to have Dr. Venugopal Gella here. So it's that time of the year, na? December. Everyone's looking forward to the year-end vacations and stuff. Yeah, but just before you go, there's one thing that you need to do, apart from paying advance tax, is filing your annual returns for GST for the financial year 22-23. So since GST is an evolving thing. There are a lot of changes year on year. So it always helps us to get to know whatever the latest changes are and what we are missing out. Uh, you know, make a better effort each year, right? So with that in mind, we have a session organized today, which will help you figure out what needs to be done while filing the annual returns. And we have with us the eminent Mr. Venugopal Gella. He's the founder partner of Venu and Vinay, and he's been a topper since school days. And all of you have met him once or twice and listened to his workshops. He's a excellent in-depth knowledge on this subject. So it will be wonderful to listen to him and have our doubts clarified. So you can go ahead, sir. I'll mute myself now.
Sure. Thank you, Krishna, for your kind words in introducing me. And it's been pleasure to meet the members of AIAMA. And as Krishna was mentioning that, yes, it's a time where people thinking for planning holidays, year-end, Christmas, and for kids and everyone. And equally, it's important that you get your GST annual returns. Now, some of you would have got it filed, or most of you would be in the verge of finalizing it and getting it filed. I'm sure most of you are here, might not be the persons who are preparing the annual returns, but I want to hear with an intent which you can ask back to the accountants or the consultant. Hey, have you taken care of this? Now, most times some data would be prepared and you might be getting an email, sir, we have completed everything. If you confirm, we will file the returns. And honestly, you yourself don't know what to check and what to confirm because such a lengthy form. All right. So what I'll be doing today is I will be putting up some questions to you, how you will be considering asking it, both on the outward side, ITC side, then on the control check before filing and the tools that needs to be used. I will be sharing the copy of the presentation, which is more for the junior team of your organization to handle it. And feel free to interrupt me whenever you have a question or a doubt. But more importantly, let's get the context of these returns, annual return GSTR 9 and 9C. Firstly, as I said, this is the last opportunity for you to correct the errors that are there in the monthly returns. Now, error is human. Error is human. It's quite possible that the accountant might have done a data entry in the accounts, like in the tally, whatever the software you are using, there's a data entry error. Or the accounts are good, but the person who is filing, taking the data, he has missed out something and filed something else. Situation 2. Situation 3. Today we know that we claim input tax credit only basis the values which are visible in GST are 2A or 2B. There are times where some vendors intentionally and unintentionally they file late and it is visible after 2 months, 3 months. Or there are some invoices that got corrected. Like I have raised an invoice to Krishna and later Krishna comes back and says, hey, this is not the GST number or GST number is missing. Can you just file with the GST number? There's no change in the turnover. There's no change in the tax liability, but some values are getting changed and getting transferred from one account to other account. So errors can happen anytime. And there is no concept of revising a return once filed under GST. The way the technology has been built and the system has been designed, once you are filing the return, it is like permanently filed. It can never be corrected. Having said both, that you cannot correct a return and you have a last opportunity to correct, it is your annual returns. Please note, the annual returns is for always a financial year. It's always for a financial year. So right now you are filing the annual returns for the financial year 22-23. In the month of September, you filed your IT return, your tax audit, your ROC returns. Equivalent of it, you are filing the GST returns. Now you have already filed GSTR 1 and 3B relating to this by April itself, right? But again, you are filing the annual return. Some of you might feel it as a burden that I'm doing the same stuff again. For some, it is like, okay, what is that I should be looking at new. Let's first get the context of the annual returns ready. Now, when I say context, what do see? Knowing the context is always important because context gives the frame with which we see the things. Context is like your window frame. Like in the cabin where you are sitting, if you turn left, right, you have a small window, big window. What you can see, the outside world is given by that window frame. If it's a smaller frame, smaller things you see, bigger frame, bigger things you see. But you can't see anything beyond what that frame is. Likewise, if you don't understand the context of GSTR 9 and 9C, then you really don't know what to fill where. But if you know, get the context clear, getting the data filled is like a child's play. Firstly, we have two forms called GSTR 9 and 9C. GSTR 9 should be used. GSTR 9 should be used if your aggregate turnover in a financial year is exceeding 2 crores. And today 2 crores is a smaller number which is easily doable in a month's day for many of you. While 9C to be used if your turnover is more than 5 crores. And please note, when I say 9C to be used, I am not saying as an alternative. You will have to file GSTR 9 and 9C. We call this as an audit statement or a reconciliation statement, while 9 is called as annual return. So there are two documents. And this turnover I should not be seeing state-wise, I have to see pan-wise. If you are present in the state of Karnataka, in state of Maharashtra, Delhi, all the three states turnover you have to see, that is point number 1. Point number 2, you have to file for all the three registrations separately. So 3 GSTR 9s and 3 GSTR 9C. So that means you have one audited financial statements. You will be carving out the turnover from audited statement to GSTN 1, GSTN 2, and GSTN 3. That's how you will have to split. Now, after splitting, what is that I have to report? GSTR 9, we call it a statement of fact. While GSTR 9 is the statement, what should have been the fact? For example, if you have paid the taxes, you will be reporting only the turnover on which you have paid the taxes. While if you have not paid the taxes, but you are still liable to pay the taxes, while you have not paid the taxes, but you are still liable to pay the taxes, then you will be reporting those values in your 9C. The turnover on which the tax is payable, you will be reporting. Assuming you have purchased a motor vehicle for your MD, a car has been purchased while there is no input tax credit, you are not eligible to take input tax credit. But assuming for some reason you have availed the ITC, whether eligible or not, having availed, you will be reporting here. While you are reporting only what is the net eligibility. So 9 is what you have done. 9C is what you should be doing. What you should have been doing. What's the right thing you should be doing? That is 9C. For most of you, it might be looking same, it might be looking different. Give you a small example as to what values to go in GSTR 9. I said the turnover on which taxes are paid. So when we say the turnover on which the taxes are paid, let's say you have a value in your books of accounts. We'll start with a happy path. That value which is there in the books of accounts is there in your GSTR 1, in your GSTR 3B. It would be there in your GSTR 9 also. This is the annual return that you are filing now. assuming it is there in your GSTR1. GSTR1 is only a sales reporting, it's an information return. While you are paying taxes through GSTR3B. If the taxes are paid in 3B, then you can report that in your GSTR9 also. While you have reported your sales, but you forgot to pay taxes in 3B. If the 3B taxes are not paid, you will not report in your GSTR9. What's the way out? Since I have not paid the taxes, I am realizing now the way out is you have a form called DRC03. If you are making the payment of taxes through DRC03, you can report that information in your GSTR9. So this is like a statement of an annual return where the taxes have been paid. Just to give you how the form has been designed, very beautifully drafted form. It's into 6 parts. Part 1 is the basic information. Part 2 talks about liability. Part 3 talks about input tax credit. Part 4 is the tax paid details. Part 5 is the adjustments that you have done in the subsequent period. When I say adjustments, if you have missed out a paying tax in the month of, let's say, March, that tax that you have paid in April that you will be reporting into your Part 5. And there's another information the government was wanting, so that goes to Part 6. This is about GSTR 9. While when you talk about GSTR 9C, it is about reconciliation of what is your turnover, like what should be your turnover. Considering from books of accounts and various things, what should be your turnover? On this turnover, have you paid the tax, computed and paid the taxes correctly or not? What is your actual input tax credit? Is there any additional liability that is coming which you want to pay in 9C? Is what you will be reporting. And this is more from a reconciliation with the books of accounts. So what is the information that you need to file your GSTR 9? Firstly, a primary information, you need the statement of all the data that you filed and your books of accounts. While you also need an additional information of 3B of next year, 9 of the previous year, DRC03 payments. You need this information handy only to file it. Let's start with the turnover reporting and whatever the questions that are there. Firstly, one has to do a proper reconciliation of the turnover that goes for GST. For example, most of you are a proprietor partnership firm present in one state, while some of you are present in multiple states. For the purpose of books of accounts, your turnover is only a single turnover. But when you do a stock transfer from one state to other state, that is also be treated as a turnover for GST, though which is not a turnover for the books of accounts. Some of you are also undertaking job work. Some of you are also undertaking job work. When some money, goods have been sent for the job work, is definitely not a sale. But for the job worker, the advance that has been given, he has to pay tax even though he did not do his job work activity, right? For some of you or most of you deal in exports. When you send the goods, you have supplied the goods at the rate of 82. While you have realized the money, you have realized it 82 rupee 50 paise. There is a 50 paise increment. This 50 paise that is higher, it is there as revenue in the books of accounts, while for the which GST haven't paid. Some of you, when you buy the chemicals from the manufacturer gives you a credit notes and incentives. These credit notes and incentives, you record it as your other income and you don't pay GST on it. I am not saying that you should pay GST on it. So there is a turnover for GST, there is a turnover for the book. So you need to do a reconciliation of all this and derive from the books turnover. You have to derive from the audited financials, from the PAN-based audited financials. You got to derive the turnover. what is the turnover for the purpose of GST? After all the adjustment, what is the turnover for the purpose of GST? You got to do a derivation by adding something or reducing something. So this is a first exercise you should ask the consultant or an accountant that whomsoever is doing. Have you derived the turnover from the financials to the GST? If yes, look that as a quick review. After having looked at it, split the turnover into the turnover where the tax is applicable, which is your table 4, and the turnover where the tax is not applicable, which is into table 5. Just quickly ask, is that segregation has been done properly or not? Of course, table 4 has a detailed reporting, B2C, B2B, exports with pay, SZ with pay. You have a detailed reporting. So it's just an information, but just get, you have this been split. Like table 4, there is a split for table 5. Just see whether the split has been done or not. So what you should be looking at as a turnover before it is filed, look at this value. How much is going here, which is your turnover 5N? Is this matching with my IT return? Is a question that you have to ask. Is this value matching with my IT returns? If this is matching, then you're good. Then absolutely you're good. Everything is taken care. Now, there could be a situation where the taxes have been paid within the financial year. That means in the financial year 22-23, you would have paid the taxes. Or some turnover where you missed out and you paid the taxes in 23-24. Or something you missed out and you realize now and you are paying. So the situation is into 3 different things. So if you paid in 22-23, you got to report it into table 4. If you paid in 23-24, you got to report to table 10. If you are paying through DRC03 now, you have to report it into table 4. If you have not at all paid, you will not be showing anything. Why am I insisting this? Though this is little technical and as a owner, so you don't need to know. Why am I insisting it? If one makes a mistake here, then it's like very, very little savior. Now, as I said, error is human. That is why you have an opportunity to correct. Don't make a mistake again in this. Let someone fill the right data, right computation into, if need be, you can engage a CA or someone, get this vetted and ensure that they are doing a right reporting. Let there not be notice and audit saying because of this erroneous reporting. Now, I want to discuss on some of the points about the turnover and various things about the turnover that you should be knowing. Firstly, when you freeze your turnover, you have to know the turnover could be anywhere in the financial statement. What we generally look at as a sales, but look for other income. Look if any of the reimbursements that you have claimed, packing charges, transportation charges, has been netted off with those expenditure. If you have sold fixed assets during the year, you have to pay tax on the gross value of the fixed assets. Along with, there is a provision called 18 subsection 6, where if ITC is not used within 5 years, you have to pay forego that ITC. Service income on advances, you have to pay GST. Stock transfers, you have to pay GST. Now, these are the various things that you have to look at it. But apart from this, some important points which I want to bring for discussion. Firstly, look at if there are any recoveries that you are making from employees. Some subsidized food, notice pay recovery. These are not in the nature of supply. You don't engage a transaction to make gain out of it. You're facilitating in the trade. So just because there is a receipt and revenue in the P&L, it will not become as a supply. While you are reporting and making the payment of taxes, please see what is the HSN that you are using. Sometimes some of you are also involved in trading of the chemicals and raw materials. The HSN for that and rate of tax is different. Erroneously, unknowingly, I have noticed many times accountants use the same thing. Like you are under the inverted duty structure, you will be getting the refund of the unutilized ITC only to the extent of the inverted duty turnover. You will not get a refund when you are into trading, it's like you buy some chemicals and sell, you buy some bamboo sticks and sell, you don't get any refund of it, right? Because you are into trading. Even though you purchased 100 quantity, you sold only 10, 90 is lying in the stock, you can't expect a refund of that 90 which is lying in the stock, right? So it's very important that you ask, what is my HSN classification and where do I find this? You'll be finding it in table 17, ask for it. Valuation, I don't see any issue. And time and place of supply is the invoice date in most of your cases. Please review debit notes. There has been change in the rates of taxes for many goods. Thankfully, your industry is not at like that 18%. So not much changes so far. So nothing much to be worried. But review of credit notes is very important. In the sales, when you made a sale and the customer has not made the payment to you, a bad debt cannot be a reason why you want to reduce your turnover and reduce the tax liability. It should be a sales return. Or he's saying that the quality of the sticks that I have asked versus what you have sent is different, so I'm reducing it. There should be a deficiency in the quality of the goods which I made supply. Only then it will be eligible to be recorded as a credit note. Second conditions, having issued the credit note, you should report in GSTR1. If you have not reported in GSTR1, it will not be treated as a valid credit note. These are the things that you need to look into it. Then the other point is, some of you might be proprietor and partners. For the purpose of your balance sheet, you have only disclosed your balance sheet of the business. But in your income tax return, you have SB interest income, FD interest income, you have residential rental income that has come. All those should also be forming part of your GST returns. Certain issues I want to discuss on the annual returns for you. Firstly, classification related issues. Whenever you are doing some bundling activity, for example, you have dupe stick, you have the regular stick, and let's say you are bundling it with some other items. Now, today, the business is bundled. Let's say it's bundled along with when you're giving a book, you're giving this. Now, book is free, but these are taxed at 5% or 12%. Then it will be treated as a mixed supply. If you are bundling something, then it will be treated as a mixed supply. The whole of product will be treated as something else. And it's very common in the business, for instance, to bundle and supply something. So please look at individual HSNs of the same nature, same rate you are bundling and giving. I get it. But when you are different products, different things, bundling and giving, then it's going to become an issue in the classification. E-waybill reconciliation is must, because there are situations where many times you'll get notice saying that you have an e-waybill while the sales are low, because the e-waybill has been generated, but for some reason you did not make a supply, vehicle was not available, whatever. Just because there is an e-waybill, will it be a supply? It cannot be. So you need to establish that there is a value generated in the e-waybill, but it is not a supply. Now, unless you do the reconciliation now, you will not be in a position to tell the officer that, hey, look, there was an error. I agree my e-waybill was there. Just because in e-waybill it cannot be supplied. Then in case of export of services, which is not applicable in your case, but I'll talk about export of goods. There is a new rule which is saying that if you are exporting the goods with the payment of tax, if you are exporting the goods with the payment of tax, you should be realizing your sales proceed within a period of 12 months. In case if you're not realizing your sales proceed, you should be refunding back the money that you have realized, because exports with pay, The moment you file your shipping bill, it is treated as a refund application. Refund will be processed within 7 days of your GST or 3B, subject to the values in 3B and R1 matching, right? But you should realize the money within 12 months. A reconciliation of work orders, the goods sent to the job work and that have come with the ITC 04 is something which is must. Most of the people are not following it. You should tell your accountants that this is an area one should definitely follow. This is a common mistake which I have noticed, that I have made the sales, I have sold the goods when the goods are coming back. Instead of taking as a sales return, someone are taking as purchases and putting as an ITC. Contrary, when I purchase the goods, availed ITC, when I'm returning my purchases, instead of reducing my ITC, someone are reporting it as the taxes that are paid. So both are wrong. Treating something as tax paid or ITC is wrong, that needs to be taken care. Barter transactions are also quite common. While you agree with someone to barter, say, the office space with the rent, and you trade off with some of your supplies, you got to ensure if something like that, you gross it up better. Next comes the related party transactions. Ensure the related party transactions are arm's length. If not, there is a safeguard by way of Rule 28, but you should be aware that the arm's length transactions between related party is must. Pure agent collection. Generally, you will not be having any pure agent transactions in your business. Pure agent transactions means on behalf of someone, you are receiving money and paying it. Like, let's say, electricity charges. If someone is a tenant and you have also sublet, you are paying the electricity charges of his, you are collecting from him and paying. It's not your meter. Only those things you can be treating as a pure agent. Otherwise, there will not be treating as a pure agent. You specifically ask people whomsoever are filing, is my turnover has been reconciled with income tax? Is it been reconciled with 26 years or not? Ask these specific questions whether those reconciliations have been carried out or not. This is very important, right? So broadly, these are the various things which one has to do on the reconciliation of various points. Once this is done, they got to prepare the same turnover into multi-facet. When I say multi-facet, taxable versus exempt, total turnover is split into two categories. In those taxable B2B, B2C, all those categories split. The same thing you split how much is interstate supply, intrastate supply. How much is with the various rates, 5%, 12%. You got to do all this kind of reconciliation. So ask them that have these reconciliations been done? If not, let them do it. Because if not now, tomorrow someone is going to ask this point, right? So before I move on to GSTR 9 related on input tax credit, any questions to anyone? So far, is the flow okay? Is this understanding is like, am I too speed, too far, too slow, or too high in concept? Is everything okay? In a virtual session, difficult to know whether someone is following, not following. So far, is it clear? If it is, I want you to please put it as yes in the chat, please. Thank you so much. Yeah, let's move on to the ITC reporting. Now, ITC is always given by 3B, right? ITC is always given by 3B. So there is a proper detailed reporting. In table 6, we talk about ITC that has been availed. Table 7, we talk about ITC that has been reversed. In table 8, we do a reconciliation with the 2A. For those of you who don't know 2A is the vendors, you are from whomsoever you are buying, all your vendors, their sales data. That means your purchase data. So they are showing you that much you have been sold to you. So a reconciliation of that. Now, there is an equivalent reporting of values which are there in GSTR 3B month on month that one claims the credit in 3B. Equivalent values are reported in GSTR 9. Today, it is a known norm that you cannot take any input tax credit if it is not visible in your GSTR 2B. Basically, the difference between 2A and 2B, 2A goes by accrual method, like your sales invoice. 2B goes with a receipt based method, like your bank statement. On a longer duration, both your sales register and bank inflow will match. But any given month, sales might be higher, receipt might be higher, because there's a timing difference. That's what it is, 2A versus 2B. So you don't need to be worried about the matching of it, because it will match at a longer. So 2B gives you how much is the credit that you can avail. Now, from August of the previous year, August 22, we got this new GSTR 3B wherein they were saying that whatever is there in your 2B, take it. Whether you like it, you don't like it, eligible, not eligible, take it. Now, when they say take it, they did not clearly say that take it to your credit ledger. Then they only said is report it in your 4FI so that my 2B and this is matching. From there, whatever is ineligible, reverse where? In 4B1, which is called permanent reversal. For some reasons, if you think that, okay, this credit belongs to you, but you have not received goods, or there is an invoice lying, you know this vendor, but I don't know whether we have made the purchase or not. So for some reason, you want to keep it on hold, you will be reporting into 4B2, which is called as temporary reversal. I have noticed many accountants were unaware of this and continued this old method of reporting. That means whatever is there in the books only they were reporting, sometimes higher than 2B, sometimes lower than 2B. Next, they were confused between reporting under 4B1 and 4B2, in which table that I have to reverse. Recently, the government has introduced electronic credit reclaim statement, which was supposed to be filed by 30th November, and you can correct it by 31st December 3 times. So, when you are reversing something under temporary nature, you can reclaim it. That means when you reclaim, the credit is coming twice. So the government said when a credit is coming twice, when it is coming for the first time, you report it under 6B. When it is coming from the second time, report it under 6H. Government wants to compare this 6B with its 2A. This is the reconciliation which one will be doing in table 8. Table 8 will say how much of the values of 2A claimed in 6B in the same year. How much of the credits have been claimed in the subsequent year, and how much of the credits which have been lost and have not been claimed. So basically, table 8 is a reconciliation of GSTR 2A versus GSTR 2B, because your 6B is coming from 2B, 2A versus 2B. If it is everything is matching, it goes to 8B. If something is taken in next year, it goes to 8C. If something you have not availed, it goes to 8D. That is how a reconciliation happens. So again, you should ask to the consultant who has done it, can you explain me the values which have gone into 8, and is there any 8D? Is something you have to ask. Is there any credit that I have not claimed which I will be claiming in the next period? Is there something like that? You have to ask that. Because if there is a credit that has to be claimed in the next year, there is a different reporting table. So purchase in this year, claimed in this year goes to table 6. Purchased in this year but claimed in the next year goes to table 13. If it is reversed in the same year, that let's say motor car credit goes to table 7. If it is reversed subsequently, goes to table 12. So an understanding and reporting of this is very much important. Now, while you are doing the reconciliation, freezing of the input tax credit. What is the value that has to go and what value has to go in is important. So all your expenditure, revenue or capital, you got to bifurcate into two categories. Those expenditure is with GST and expenditure without GST. The expenses with GST, are they eligible and ineligible? And expenditure without GST, vendor not uploaded, or I purchased from the composition dealer, is it exempted goods? Have I procured a non-GST supplies? Have I purchased from a small time dealers? Or finally, is it under RCM I have to pay? So a special focus or attention that you have to do is asking that is this an RCM that you have to be paying tax for? You have to ask that is there anything RCM? If it is with GST, you check whether it is eligible and is it matching with the GST or 2B. So you got to ask these questions. So how you are asking on the turnover side, you have to ask them, whomsoever is preparing, hey, can you just summarize my previous year data of all the purchases into this format so that I know where are the lacunas. The purpose of you attending this session is by asking these questions to the person who is preparing, so that you are aware that the person who is doing has considered all the aspects or not. Now, why am I stressing this? Because if there are any credits that are missing, then you will be aware. If there are some credits that are there, you should ask, are these eligible credits? Because there are blocked credits. Certain credits you are not supposed to take, like motor car, food, or beauty services. If the goods have been lost, anything of these, credits, you are not supposed to avail it. If the credits are not there, that means I have purchased the goods where the input tax credit is missing. Sorry, when the GST is missing in it, you should know whether you have to pay under reverse charge. So what are the goods or services that you have to pay under reverse charge? In your industry, there's nothing for goods, but services, yes. So when the expenses that were prepaid, ask this question specifically. The one which you are seeing on the screen, ask them, are there any of these services? Okay, highlighted in the blue color are applicable to you. That's why I have highlighted. The other one are there under RCM, not applicable to you. Most of you will have some transport vendors. Most of you would have paid to an advocate for drafting some contracts and other activities. Most of you would have sponsored some events, paid something and sponsored some event. Most of you would have got some registration license renewed from the government. Most of the corporates have paid sitting fees to the directors or share of profits, not considered it as a salary, but considered as 194J, pay under RCM. Most of you have a security hired by a non-corporate. If you have rented a motor vehicle, you will be having to pay under reverse charge. Recently, from last June 22, the entry of immobile property has come in. If you are paying something to the landlord is not registered, he is not charging GST, you will have to pay under RCM. Any residential dwelling. Now, you may say that, hey, that is my office, but though it is used as an office, most of you know, residential premises are converted as offices. So you will have to pay under RCM for these things. Why this RCM is important? If you are paying now, you have a time to take the credit. By 30th November, you could have reported and taken the credit. But if you have not, then it's like a loss. It is a one side. You will be only paying the taxes and you will not be taking the credit on it. So, any questions to anyone so far? Anything you want to ask before I move to the last few slides?
So the RCM is not applicable on any commercial warehouse or other rents, right? Only on residential.
Only on the residential, yes. Commercial, the landlord has to pay under forward charge. It is not applicable to the recipient. But a residential given used as a commercial, you will have to pay it.
Sir, do you want to file 4A and 4B from next month onward? So is it compulsory while filing 3B?
Yeah. So every credit that is there in 2B has to be taken in 4A5. If you feel that some of the credits do not belongs to you, you should report it in 4B. If you think that this definitely doesn't belong to you, 4B1. If you think that, yeah, it belongs to me, but I will have to do a reconciliation, then you'll have to report it into 4B2. Yeah, any other questions? All right. So a couple of points which I want to bring to your notice. Firstly, there's a new rule that has come, Rule 37A, where it is mandating you to reverse the input tax credit if the supplier has not filed 3B. See, it's filed as GST when it's visible in 2B, but you cannot take the credit if he has not filed 3B. This is a new complaint that has come. Someone has asked that do I need to mandatorily report in 4A and 4B? The answer is yes. Now the government wants to claim everything every month and track the reversals. So track it at a transaction level to track in which month you are claiming. So in which month you are reversing, reason for reversal, and in which month you are claiming. Please do tracking of this. ITC, which is only in the books, it cannot be claimed. Whatever be the reason, if something is only in the books, you cannot claim it. And if for some reason you have a technical issue, please do not delay in your R1. If you are filing your R1 late, all the people you have purchased from you are going to lose the credit. The ITC is postponed to the next month. So rate those vendors who are filing their GST R1s late. These works without using technology will definitely not be working. If you think that, hey, I'm good in Excel with VLOOKUPs, with pivot tables, I'll be able to manage, I will say sorry. That's not the world we are in. 10 years back, I would say that, hey, you should know macros, VLOOKUP, pivots, power pivots, or all those things. Sorry, I wouldn't say that now. You definitely need to use the software. Today, softwares are very intelligent. They will automatically fetch the data from the government portal. It can automatically read from the books of accounts. It can automatically email to the vendor saying that something is missing. You want to do an e-invoice, press of a button from your software, e-invoice gets generated. Everything is automated. So please use a software. And generally people ask, what is a good software? Any software is good. Having software is the important. My only suggestion is between a desktop and a cloud software, I would suggest use a cloud software because today we want things to happen on the go. So use that. Then next piece of advice is on the due dates. Do not miss filing any of the return. At the same time, you do not wait for ignoring a notice saying that no one has followed up with me. Can I choose not to report? You know, if you're not reporting it, you'll be into a bigger soup. Today under GST, cost of litigation is higher. Cost of non-compliance is higher than cost of compliance. And notice are quite common. You don't need to be worried. Like today, like I have little cold. Am I worried with it? Is like if this cold get worse, I'll take a medicine. Notices are like that. If you have a GST number, you will get a notice. There's nothing like you can avoid or escape from the notices. Notices are bound to happen. All right. Given that the notices are coming, there are certain important timelines which I want to just bring to your attention. Financial year 17-18, most of you would have received some GST audit and notice. The timelines for them to issue a demand order is December. The second set of notices you'll be getting in March, and in June. So these are the various timelines within which you will get a demand order. If you choose to file an appeal against that, you have a 3 months time to file an appeal. Do not be neglecting any of the notices or letters, correspondence that comes in. Recently, the government has introduced some more forms like DRC 01C, 1B, which is not matching with 1 and 3B, 2B and 3B, sending an automatic notice. And the time limit to reply those notice, 7 days. Within 7 days, they expect you to reply. If you're not replying, automatically they will be sending the show cause notice, and it will automatically become like a demand, and demand recovery procedures under section 79 will start. We don't want to invite all this kind of trouble. So ensure that letter comes, you attend to it. That is more important. So friends, I wanted to give you all highlights about what are the annual returns, what is the purpose of annual returns, so that you better be informed. So this is not a session where I'm walking you through each table by table in annual return. Once you get the context clear, you will be able to handle things by yourself. These are the various points I wanted to cover. I will be anyhow dropping the presentation for your future reference. We also have our GST updates WhatsApp group. You can always scan this, and you can always get into any of the discussion channels of ours. And in case if you have any doubt, we have the supporting people who supports and clarifies the questions. So this is what all I had to offer to you. In case if you have any questions, I'm here for some more time. We can take up the questions. Yeah. I also put it in the chat about the link of the WhatsApp. You can take it up later. All right. Yes, with this I've come to end. Let me hand over the session back to the host. Krishna, over to you.
Thank you, sir. That was really in depth. And even though we've been doing it for a few years, there's always something new to discover there. So it's very interesting. I think we got a good idea, like what are the pointers we need to look out for while, looking at our own data. Sometimes it's so simple. We're doing it day in and day out, but over a period of year, when it all gets accumulated, right, it becomes a big mess.
Correct.
So it's helpful, like, you gave us good pointers where to look at and how to make sense of the whole thing. I'm sure pretty many of them will also reach out to you in the future for more assistance. And
Sure.
you also look forward to more such sessions with you, sir.
Yes, thank you so much, and my pleasure always having session with the association.
Thank you, sir. Thank you so much. Thank you everyone for participating as well. Thank you.